Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since rebounding in front of the level of 75.80.90, the US dollar, which measures the greenback strength against a basket of 6 major currencies, has dropped slightly further since reaching its objective of 92.50.60. Currently trading at 91.90. The US dollar has taken advantage of this and broken above the 60-day moving average. However, still keep an eye on the level of around 77.85.95 as I do anticipate a rejection. We haven't fully broken out to the bullish case, although this bullish outside range day has actually got confirmation. So it is a bit of a tug of war at the moment. Let's see in the next 24 hours who can break higher and see if the market can clear that level of 77.85.95. The euro, since rejecting the 118.45 level, is attempting to recover. But unless we get a break above 120 figure 20, that is, then we could see another downturn. I'm not overly confident that the US dollar can actually turn back to a bearish bias. I think the bulls are still there, and therefore could see the euro falling back towards the bottom side of this range, 118. We've had two rejections to the downside and one currently recovering now for dollar yen. Not quite broken down technically, so I'm still a little bit mixed here and still a little bit cautious in case we do get a little bit more of a squeeze up to 109.50. Sterling still showing a slight bullish bias since the rejection of 138.30.40 and currently is attempting to recover. With the US dollar sort of on a bit of a wobbly path at the moment, all the currencies are trying to recover, but it's still technically not supporting it. Sterling yen coasting a little bit higher and still waiting for the sterling to break down, but technically we're still weak. One thing I would say about sterling yen cross is it does stage a significant downturn, and if we eventually get this as a mildly bearish divergence in there from the RSI, I'm waiting for this to happen. Since the bullish divergence for gold, the market has pushed on and now looking up towards 1,760.65. With the makings all there, especially with the RSI breaking through the midway point from the bullish divergence, the MACD nearly through the zero axis, does warrant this rise. Therefore, could see a rejection from 65. Nevertheless, there is still $30 to the upside. And a little bit of a mixed pattern here. Oil didn't break through 63.15. And next moment it's locked in that range of 63.15 to 67.50 to 80. Overall, though, from a technical point, I'm still in favour of seeing a downturn. Close under 63.15 gives further risk towards $58 a barrel. That wraps it for today. Thank you very much for joining me. As always, look out for the interest rate report. I hope you enjoy the rest of the day.